At what point does it become safe to revisit the highest quality semiconductor stocks? The semis have been hit so hard over the past couple of months, courtesy of worries about the slowdown in China, severely cutting the demand for all sorts of gadgets. Take Skyworks Solutions, SWKS. That's a maker of high-performance radio frequency and analog chips for smartphones, tablets, cars, GPS, broadband, wireless networking, not to mention various industrial, medical, and military applications. Mainly, Skyworks also does components for cell phones, where, for example, they might get as much as a third of their total sales from Apple, although Apple discourages any discussion of its relationships with its suppliers, so that figure is going to remain opaque. But over the last 2 months, Apple's been slammed because of fears of slackening Chinese iPhone demand, and Skyworks has been dragged down along with it. Skyworks is currently down more than 24% from its June highs, and it got hit again today, falling $5.23, 5.75%, but the whole semiconductor complex was beaten to a pulp. That's why I gotta wonder if Skyworks finally gotten cheap enough to buy. It is at 14.5 times next year's earnings, and the company's latest quarter report in July, fabulous, delivered a powerful beat on both the top line and the bottom line, temporarily sent the stock back up to 103, but it's now back to 85. These results are from before the Chinese stock market really crashed, though, and China's economy seemed to go into a tailspin. So we need to know more about a stock, by the way, that we got behind at $5 a share when David Aldrich, the chairman and CEO of Skyworks Solutions, first came on. We got to know more about how his company's doing, where it's headed. Mr. Aldrich, welcome back to Mad Money. Good to see you.
Hi, Jim. Thanks for having me.
I'm thinking about doing a little sanity check here, okay? Have a seat.
Thank you.
Goldman Sachs put out a report widely quoted, picked up by USA Today. This is a piece that's dated August 12th. It has been the piece that has dogged your company ever since. It says, remember, Chinese stock market down 6% last night. Skyworks Solutions, 83% of your revenues are from China. True or false?
Well, that's false. So we do about 20 to 25% of our revenue comes from China.
Well, no, 83%.
No, 25%.
Okay,
I can only speculate that maybe they're picking up all contract manufacturers because we have products that are built in China, but they're not consumed within China.
Right.
And I think it's important to point out that where we focus is on LTE and 4G, and that's the component of the market where we have the most differentiated products.
But
where we have
most people aren't
content.
there at 4G yet. So
no,
there's
that's right.
lots of demand in the future. It's not finite.
That's right, but I'll give you a couple of statistics.
Okay.
We have about 3 to 4 times the dollar content, average dollar content, in a LTE 4G phone than we did in 3G and in 2G. In 2014, there were under 100 million LTE phones shipped in China. This year, they're on track to be 250 million. So we have high dollar content, few competitors, higher margins in a segment of the market that's growing quite strong.
Okay, you use the term on track. Is on track still fair after the June 12th beginning of the correction of the stock market and subsequent export numbers being down 8%? Is it still on track?
Yes, it is. And in fact, we've been in China since we formed the company.
Right.
So we understand a little bit how to check the distribution channel. We don't see anything abnormal from an inventory standpoint. We do see OEM share shifts. Quite dramatic OEM share shifts within China.
Original equipment manufacturer.
But yes, that's right, our customers. And it's interesting because one thing that's a little bit unique about us is we ship to virtually every customer. So we're quite agnostic from a brand standpoint.
Okay.
So one's up, one's down. We're typically okay. And that's been the history of our company. We haven't been whipsawed much by changes in customer or brand loyalty within a segment.
I remember when the 486 came out for Intel. I got one. I said, you know what? I'm never going to need a more powerful processor ever. There's nothing that I could possibly have or want that's more powerful. I sometimes feel that Skyworks is now being pegged as the 486, and there really isn't going to be any need for what you're talking about in 2018 in your different documents. Somehow explain to me why I may be wrong, that I may need a Skyworks power amplifier in 2018 that's different from the one I have now.
Well, Jim, it's pretty simple, and I think it's helpful to follow the money. Okay. If you look at the bright spot in earnings, what have you seen? You've seen mobile payments. You've seen audio streaming, music, video streaming, delivery, right? Usurping traditional media content.
Yes.
And what that all implies and what it requires is always-on connectivity to a high-speed, reliable, efficient, and secure pipe. And that's where Skyworks
Pandora, Spotify, Google, Amazon.
Exactly.
These are not things that need less power. They need more.
They need more power. They need more processing horsepower. They need a better screen. And they need to be connected all the time. We built our company on the ability of creating system-level solutions that are sticky, that our customers can use, that they can embed within these services, whether it's an automobile, the factory floor, the home, the thermostat, now the light bulb we announced last quarter, and we're in key sets where products are becoming connected for the very first time as part of this Internet of Things phenomena. And we are in the ground floor and growing very strong.
All right, let me play skeptic again. We know that the rates are going up big on those, but they're small base versus cell phone. And in the end, the bear who's watching this is saying, what is with Cramer and Aldrich? It's a cell phone maker component, and cell phones are slowing worldwide.
Yeah, so our non-mobile business is about 25% of our revenue. We'll pass $1 billion in revenue in the next year or so. So it's not small. It's early stage. It's growing very, very, very fast. But in the case of smartphones, remember that in China, for example, 80% of the consumers today are on 2 or 3G. We have 3 or 4 times the content when you move to 4G.
80%. That means 20% does not have the high expense, high margin chips that you make right now.
That's correct.
80%.
That's correct.
But there's a stock market that went down. So will they still want better phones?
They will still want to upgrade to that level of service.
But the stock market's down.
The stock market's down, but the growth rate in those devices, as I said, 2014. They bought 100 million, 2015 on track to $250 million. And it's part of a broader connectivity wave that's being driven by the economics of having everybody connected all the time. It's affordable, it's ubiquitous, and it's in such high demand around the world.
But are we wanting to see, look, I think the Chinese market, I'm bearish on where the stock market is. So I have to accept the fact that Skyworks, everything you said, I know is true because I've known you forever, okay? But you know what? We're at that moment where it may not matter. We're in a highly emotionally charged moment about China. So I don't even know if people care right now that you say things are on track. Do you get that sense too?
Well, I don't get that sense.
Okay.
I think it's very clear between the investors who own our stock, who are very interested in the long-term secular trends. We're focused on the very long term. I mean, Jim, last quarter we delivered earnings of 38% year-over-year growth, 65% operating income, revenue of 38%. We passed over 30 points of operating income. We guided to well above the market growth rate.
14 times earnings.
We had at 14 times earnings. We have complete coverage going into the quarter. We still have complete coverage. So I think our investors are looking at the long-term secular trends we're participating in: the Internet of Things, the need for high-speed Internet access,
wearables, which I think are going to be gigantic.
4G upgrade, the automobile. The automobile is a huge market for us today.
Well, look, I am so glad you came on, and I know people are going to say, well, listen, you know what? I'm still caught up. I'm worried it's China. You heard the statistics. The statistics in the papers, as much as I'd like to think that Goldman got it right, it's a simplified number, and it's not accurate. It doesn't represent what Skyworks is doing. You may still be scared of it, but at 14 times earnings, maybe you're being paid to be scared. It's okay. David Aldrich, Chairman, CEO of Skyworks Solutions, here to tell it as it really is, as he has since the stock was at $5 a share. Stay with Cramer.